Oh, Lordy.
You're going to post on YouTube?
I'm going to post this up on YouTube, including this bit.
Damn! I wasn't
This part
expecting
too.
that.
Okay, all right.
Well, listen, Nick's been on the show 6 times previous, so I'm going to welcome you first, Frances, because this is your first time on the show, first time we've spoken, apart from a little bit on Twitter. How are you, and thank you for coming on.
Fine. It's good to be here.
Great. And Nic, welcome back. You've been here many times before. Appreciate you coming to debate the other side.
Thank you, Peter. I'm excited to regain my crown as the king of what Bitcoin did. Number 7 now. Appearance number 7. Let's go.
Well, it puts you joint with Jameson, so we'll have to squeeze another one in. Okay, well, listen, look. One interesting thing, Francis, that happens quite regularly is I get lots of emails from listeners, and I'm regularly being asked to bring on detractors. They're saying, you're too positive about Bitcoin, you're not dealing with the arguments, you're all about the moon, blah, blah, blah. So it's actually great to get you on. I actually find you one of the more reasonable detractors, even though I don't entirely agree with you. So I appreciate you coming on. Just so anyone listening who knows, I am pro-Bitcoin, but I'm going to try and sit outside of the argument and just try and moderate this and allow you to discuss it. Just to begin with, Francis, can I ask you, with regard to Bitcoin, in all honesty, if you heard good enough and solid enough arguments, do you think you would change your viewpoint with it? Or do you feel very entrenched in your view with Bitcoin and you're unmovable?
Can I distinguish between two things? There is Bitcoin itself and a lot of the stuff around that, a lot of the economic arguments around that. And there's the wider cryptocurrency ecosystem, and there are two different things there. I am quite negative about Bitcoin itself because I think the economics doesn't make sense. That doesn't mean I'm negative about the whole of cryptocurrency. I'm certainly not. I think there's something exciting going on in the space. I just have serious reservations about Bitcoin itself because of the economics.
That's kind of funny because I would say me and Nic probably, well, let Nic answer for himself, but I'm kind of the opposite. I'm quite negative about the cryptocurrency industry and positive about Bitcoin.
Oh.
Yeah.
Well, we could have an interesting discussion about why that is then, and why I, as an economist, think the economics of Bitcoin doesn't make sense, but the cryptocurrency industry as a whole has some interesting things going on.
But do you think your mind can be changed?
I am really not a fan of very hard money. I mean, Bitcoin as it is now seems to have taken over from the extreme gold bugs that crawled out of the woodwork after the financial crisis. And I had lots of arguments with them too, and they never managed to change my mind either. So I'm not entirely sure why Bitcoin would succeed when they failed. Okay,
that's fair. What about you, Nic? Do you think there's any chance or any possibility if the right arguments were put in place, you would actually turn against Bitcoin, turn negative?
Oh, I think that's unlikely. I mean, I try to be Bitcoin moderate. I jokingly said that I'm a Bitcoin moderate now. So I try not to be completely evangelical about it. I think that Bitcoin is a good system. It functions well. And I think it's sort of a morally good system. I think it's something that should exist in the world. And it's a safety net for potentially a lot of people. It's an alternative to central banks. If Bitcoin were to fail, though, I would happily embrace whatever the successor is, so it's not all or nothing for me. I totally accept that there's a possibility this experiment fails. At that point, I'll look for whatever's next. But I think something like Bitcoin should exist.
I really want to ask a question, if I may, because you said something there, Nic, that I think is really kind of hits to the heart of what's going on here. You said it was a morally good system, and I actually fundamentally disagree with that. I don't think it is. And if I can explain, and I think this is a lot of the discussions I've been having recently have been around this kind of question, not so much of economics, but of morality. What is a moral good? And the moment you start saying, I think it's morally good, I think we are kind of discussing, we've gone way beyond economics and money and things like that into sort of much more existential and philosophical questions, really, that I think maybe be worth picking up.
Well, we can start there. I mean, it jumps in ahead of some of my questions, but my first point there to you would be, do you actually think Bitcoin should not be allowed to exist, Francis? Do you think it should be banned?
I'm generally a little bit libertarian in some respects, so I don't have a problem with Bitcoin existing. I have a problem with Bitcoiners trying to seize the moral high ground. Something can exist just as a thing, as a product, as a good. If people want to invest in it, that is their choice. I'm not going to interfere with that. Where I have a problem is with the kind of the normative, you should invest in this because it is morally good. I don't agree with that, and I think that is unfair reasoning.
Well, let's unwrap then. Why do you think, what is your argument for it not being morally good?
I think it boils down to sort of what you consider to be the role of money and of government particularly, and whether you regard money as a good thing in itself, some independently of the state and the community of which the identity that you hold. And I am troubled by the idea that our governments and our states, our nation states, our identity as who we are really is so bad that we need something outside those to attach ourselves to give us a moral anchor. That doesn't seem quite right to me. And I'm also concerned with the idea that there is some kind of permanent, immutable, unchangeable anchor that people can attach themselves to, which will protect them against anything that can happen in the world. Because, down the centuries, that's been the role of God, really. So are you regarding Bitcoin in some respect as a replacement for God? They change and decay, and all around I see, O thou that changest not, abide with me. And are you seeing Bitcoin as that immutable, unchangeable thing upon which people can always rely for all eternity, replacing faith in a God who will take care of you, who will provide for you, who can be completely relied upon? There are lots of issues with this that I struggle with. And I struggle with that. I'm going to pin my colours to the mast and say I struggle with that idea of Bitcoin as the immutable, unchangeable, totally reliable thing in which you can put your faith. I struggle with that as a Christian because it seems to me to go against what the Bible teaches about relying on God to provide.
Well, I'm an atheist, so I can't really add to that. But Nic?
For the record, I'm a Christian as well, and I haven't found a contradiction between my faith and Bitcoin. That's an interesting argument, though. I don't know if I've ever heard that before. I tend to think that they're very distinct concerns. One has to do with protection from a capricious nation state, and the other one is, metaphysical, sort of ontological, pursuit. And I know it's very popular to describe Bitcoin as religious in nature, and you can certainly identify the trappings of religion in Bitcoin if you look hard enough. But I like to push back against that. To me, Bitcoin is a pragmatic thing. It's a way for individuals to safeguard their savings, relative to the state. And it's an independent property rights system, which exists outside of the established legal system. And doesn't rely on our current institutions for it to function. It functions on its own through cryptography and incentives. And, so I think that's really the purpose of it. And if you look at where it's popular today, it's in places where those institutions are decaying or absent, or property rights are really not being respected. So it's popular in China, popular in Venezuela, Colombia, Turkey, like places where you see currency crises. And while, a lot of people see money as inherently a creation of the state and sort of totally indexed to the state's role in the economy, I think there's always going to be a role for non-state monetary commodities. Historically, gold has served that purpose. And then today, Bitcoin is it just, in my view, a slightly more high-powered version of gold, essentially.
So, Francis, what do you think about Nic's point there in that, should we all accept the state and the state's mistakes and the impact that might have on us? Or do you not see actually a solid moral argument for Bitcoin in that it gives people an opportunity to opt out from the state and the mistakes they might make, which impacts the wealth that we've created? For example, we've seen what's happened in Lebanon, and there's high inflation in Turkey right now. We've seen what's happened in Venezuela. can you not see a moral argument for people to actually have that opt-out?
Oh no, I can see the argument for that. When I said already that I don't have a problem with people opting to use that, and there are cases where that would make the sensible thing to do. I think what I'm objecting to is this kind of opposition that says it is morally good and state money is morally bad. And I've seen that argument made in a book recently, which purported to be a Christian book. And I struggle with that because money is neutral. Money is just a thing, right? There is no morality in money. The love of money is identified as being a bad thing because of the distortions it creates in human behaviour and the way in which it cuts them off from the love of God. But money is just a thing. It's a means to an end. It's not a thing. It's not a thing in itself. So the moment you start trying to claim that money, some kind of money, is intrinsically moral, then I think you're on fairly kind of sort of swampy ground, really.
So I guess I just wanted to clarify my position from earlier. I mean, I brought up the morality of the Bitcoin because I believe that it's good, like ideologically, fundamentally, that it exists, period. I wouldn't ascribe a moral status to investing in Bitcoin or not. I think that's an individual's decision, and I'm not encouraging anyone, at least not right now, to invest in it. So just to, briefly clarify my position on the thing. But yeah, I do think fundamentally it's good that there are alternatives to, sovereign currencies.
Francis, I've been through your Twitter and I've collected up some of your most strongest arguments against Bitcoin. But just to help us, you've already mentioned the economics, but could you articulate the main issues that you have, and we can use those as a framework for the next section?
I think a lot of my issue with Bitcoin is to do with the incentive structure, really. I mean, the whole concept of a deflationary asset, an asset that naturally appreciates over time, actually makes it very difficult to use as a medium of exchange. And yet, if you go right back to the beginning of Bitcoin, where it started, it was about a medium of exchange. It was presented as a peer-to-peer payments network. That's what the white paper says. And that is what it was promoted as in its early days. I was there. I remember it as a payment system, disintermediating the banks that had nearly blown up the world. That was what it was supposed to do. And lots of us were quite in favour of it because of that. And improving international payments, which are a mess. They're better now than they were, but not hugely better. And on which the banks had a stranglehold, and a very expensive one too. And governments had a stranglehold, the US government with its sanctions actually making it impossible, for example, for charities in Gaza to get any funds, things like that. Bitcoin offered a way of getting around that kind of unreasonable thing. And it lost somewhere around about 2015, it lost the plot. I think it happened when Bitcoin started to hit capacity limits. Was around about 2015, as I recall, when the whole scaling debate blew up, and it became apparent that Bitcoin was, as it stood then in that design, its original design, was not going to handle the capacity needed to become a main international medium of exchange. And we then had the big block size debates and SegWit and all the rest of it. And Bitcoin itself, Bitcoin Core, we had the Bitcoin Cash hard fork, yeah. And Bitcoin Core at that point, that's when the pivot happened to this kind of digital gold, Bitcoin standard underpin the whole world currency. Let's all save in Bitcoin, and it'll appreciate naturally over time. And that's really when the whole kind of hard money economics took hold. Prior to that, it wasn't so dominant. Which is why I said that in Bitcoin's early years, I was having these arguments with gold bugs, not with Bitcoiners. So it's almost like there's been a pivot at some point for Bitcoin Core, and I'm using that term carefully, to in a way take over from the gold bugs on the we need a form of hard money, we should return to the gold standard, we should everybody should save in golds, all this kind of stuff we were getting straight after the financial crisis seems to have transplanted itself into Bitcoin Core. And that's a lot of my objection to it, is that I feel that although it's reasonable to have something like gold, Bitcoin, whatever, as an asset for people to save in. Trying to use that as a medium of exchange is a recipe actually for rising inequality and scarcity and really a lot of difficulty for people for whom that asset is going to become increasingly expensive. And if what you want to do is fix poverty and hunger and all those things, adopting a deflationary currency isn't the right way to do it.
Okay. So I think I understand your argument. I don't agree with your entire version of history, but I don't think we need to kind of to analyze that in terms of dates and stuff. I actually have a small amount of sympathy for the idea that Bitcoin was originally meant to be a medium of exchange. I've often found it confusing that people argue against the fact that it did say a peer-to-peer currency, and it did talk about online transactions. I don't know what your feeling on that is, Nic, but just before I hand over to you, Nic, it does sound to me, therefore, Frances, you were originally a bit of a fan of Bitcoin.
I was. In its early years, yeah, I was, because I started writing in the monetary space after the financial crisis because I knew about banks. I understood banks, I knew how they worked, and I could see the need for something better in the form of a payment system than certainly what we had at the time. It's a matter of some sorrow to me that Bitcoin itself seems to have deviated off in this other direction, which I don't think is particularly constructive.
Nic, do you have any sympathy for people who read the white paper and saw a peer-to-peer electronic exchange and talked about the e-commerce online and being a tool for e-commerce? Do you have any sympathy for the people who think it might have changed or feel like Bitcoin changed?
Sure. Yeah. I mean, and if you look at, arguably the number one promoter of Bitcoin from the early days to present, Andreas Antonopoulos, he promoted Bitcoin as a alternative payment system for the internet, cheap, effective, global, low fee, fast. Obviously, Roger Ver, another, kind of infamous now advocate of Bitcoin, saw it the same way. And, it was this conflict of visions that led us to a schism of sorts, or a falling out or disillusionment. But yes, a lot of Bitcoin's early advocates saw it, in my opinion, in a somewhat reductive or wrong-headed way, as like a payment system in the mold of Venmo or PayPal. Now, I would stress that like the white paper says a peer-to-peer electronic cash system. My understanding of the way that Satoshi meant cash is a fast settling payment system where transactions are final, and so there's no transactional recourse. So, the question is like, how do you build a cash system on the internet with finality? And that expression, like if you want to make an apple pie from scratch, you have to invent the universe first. It's kind of that situation because there had been other attempts at digital cash before. Bitcoin wasn't the first. And basically, they were centralized and they mostly failed. So, the question is, how do you build how do you build a cash system? You need a base. And so, in my understanding of Bitcoin is it's a monetary system at the base, and then kind of a payments or transactional system on top of that. If you look at DigiCash, for instance, that was a cash system online, but it was completely centralized, and it basically failed because it was indexed to the fate of this single company. Now Bitcoin, Satoshi had to figure out a way for it to be resilient and robust, and he basically couldn't work out a way to have it reference an external asset like the dollar in a decentralized way. And we still don't really have a truly decentralized stablecoin, in my opinion. So I think, Satoshi didn't have the opportunity to build that dollar-based medium of account into the system, and instead had to devise a monetary policy which was completely internal, completely sort of endogenous and self-referential monetary policy. And so he opted for the limit of 21 million units it could have been any limit, but the point was he had to devise monetary policy because he had to build the monetary system so that he could build a payment system on top of it. So you can sort of trace how those design decisions were arrived at based on the constraints that he faced at the time. So, we've tried digital cash systems based on, sovereign currencies in the past, but kind of my view of Bitcoin is that you had to create the underlying monetary basis first and then build the transactional network on top. The other point that I would briefly make would be certain early Bitcoin adopters and evangelists did see Bitcoin as a store of value style asset, as opposed to merely a payment system. So I would point out, Hal Finney, the first person outside of Satoshi to edit the software, talked about Bitcoin as a high-powered reserve asset for a analog of a neo free banking system, basically. So Bitcoin is a gold-like analog. If you look at some of Satoshi's other writing, he explicitly compares Bitcoin to gold, really talks about it as more of a monetary commodity, although you could say that he's contradicting himself in doing that. But so there were certainly factions of early Bitcoiners that saw it as a gold-like commodity to serve as the base of that monetary pyramid, as opposed to merely just a payment system.
Something I've brought up recently, Francis, in a couple of my interviews is I've recently read the Jonathan Haidt book, The Righteous Mind, where I was trying to understand political division. And one of the things he talks about there is the different moral foundations of conservatives and liberals. And when you raise the issue of Bitcoin becoming more expensive and you worry about it creating wider inequality, that makes me think you're probably more likely, therefore, progressive, you're a liberal, and that falls under the care harm moral foundation, that your first foundation is you worry about the harm to others. Would I be accurate in that?
Yes, assumption? I think that is a fair assessment. And like I said, that if you think about where I come from, what I said about my background and how I got into this space in the first place was to do with the fact that the existing system was doing a great deal of harm. In my whole book, which is about QE, is about the harm that QE does, and the way in which we could do things better. No, so it's not that I'm any fan of what we're doing in the conventional system. I just don't think that Bitcoin solves the problems. I think that Bitcoin potentially creates different problems or other problems. It doesn't solve the fundamental problem of poverty and inequality at all.
Well, there's a lot of conservatism that wraps around Bitcoin. The socialist Bitcoiners or the progressive Bitcoiners tend to get shouted down quite a bit. There's a lot of conservatism about Bitcoin. Bitcoin has a lot of individualism, and therefore the kind of like the moral foundations you have don't tend to sit with some of the Bitcoiners. Nic, what do you think of that point though? That as Bitcoin becomes more expensive in terms of the nominal price, do you think that creates wider inequality? That can create wider inequality, or was that a moot point?
Well, I'll just briefly respond to Francis' point about inequality. I think it's probably a little bit of an unfair standard to, require that Bitcoin were to solve something like inequality. I think that's a broader societal issue, and I don't see any single asset or asset class being able to solve that. And that's ultimately something that I would place at the feet of the central bank. And I agree. I think QE and extremely loose monetary policy has been, very much a cause of the inequality we see in society, especially take 2020, a year where asset prices skyrocketed and most regular working class folks were unemployed, while we were injecting trillions of dollars into the economy. For the most part, those weren't direct injections to households, but it went through the corporate sector, ended up trapped, in the financial sector. So I would place a lot of the blame for the extreme inequality we see in society at the feet of the central bank.
I wouldn't. Can I jump in, because I disagree with you? I'm critical of central banks, yes, but if I may jump in.
Well, Francis, shall we? Yeah. Nic, sorry, was there anything you needed to finish there? Just
no. Yeah, go ahead by all means. That's fine.
Yeah, is that okay? Sorry, I really did want to pick you up on this, because I keep hearing this, And I hear it actually in the conventional world as well. This is not just a Bitcoin thing, that it's all about central banks. And one of the things I've been saying, I think for 10 years, it's not all about central banks. If you actually look at the wide wealth inequality we have, that actually goes back to the 1980s, and the original cause was actually the Reagan era tax cuts. In other words, it was fiscal policy that caused wealth inequality. Yes, okay, so QE doesn't help. It raises asset prices, which it is designed to do. It's an interest rate tool, and when you raise asset prices, you depress interest rate, or you depress yields, and that's what it's designed to do. But and so you've benefited asset holders, and you haven't benefited people who don't, and you've priced out people who don't have assets, right? Which is the criticism. But the fiscal policy, when we have tax cuts for the rich, like we had in the 1980s, and we had again in America within the last few years, they widen inequality much faster and much more effectively than anything central banks do. I think my main criticism of central banks is that actually what they do is not very effective generally. Fiscal policy is way more powerful, and we have frightened ourselves into not using it.
Yeah, I that's fair. I mean, my pushback to that would be that Reagan only governed for 8 years out of the last 50, and we didn't have
tax cuts remained. The tax cuts were never restored.
Yeah, but I think like if you had to devise an ultimate cause for the inequality in the U.S. at least that's been growing since the 70s, I would place it at the feet of the petrodollar system, which kind of structurally transformed America into a country that does not have a manufacturing base, that outsourced a lot of those middle and working class jobs abroad and turned into more of a consumption driven society, and it caused the dollar to be kind of structurally overvalued, would be sort of my ultimate assessment there, as opposed to tax cuts. But the point is well taken.
I agree with you about the petrodollar system, and that doesn't get talked about enough, was the way in which the after the Nixon shock, when the dollar was the convertibility of the dollar to gold was suspended. I mean, it was very unstable there at the time. In about 1974, I think it was the OPEC agreement, when they agreed to price oil in dollars, and then you had the recycling, the dollar recycling with OPEC recycling their surpluses back into US treasuries and all the rest of it, and we're kind of still on that. Really, that's been the story of the last 50 odd years. And I agree with you that it's a system which has proved stable, but it's not. But it comes at a price, which in America has been the loss of your manufacturing base, really. Structurally overvalued dollar, the dollar dominance, which has actually increased in the last 10 years since the financial crisis. Despite the financial crisis, the dollar is even more dominant now in international trade than it was before. So we're actually going in the opposite direction. And that's another thing that makes me quite sad about Bitcoin, because it was maybe an opportunity to just start to nibble away at that dollar dominance. We actually went in the opposite direction.
Well, I wouldn't count Bitcoin out just yet. I think that is one of the cases for Bitcoin, is that it is a neutral settlement asset, which could potentially denominate international trade between mutually untrusting counterparties. My guess here is that if the dollar system wanes, I think that would have to be accompanied by a geopolitical realignment, maybe America becoming more isolationist structurally and dialing down the military adventurism and so on. If the dollar's dominance actually does wane, I think there's no suitable replacement that's ready to go. I don't see an alternative. I don't see the euro or the yuan being a full replacement. I think instead we'll have a patchwork of alternatives. And I think Bitcoin could well be one of those. It's just a function of getting it ready and having it be sufficiently monetized in preparation for that.
But would you agree, Nick, that the Bitcoin itself is not ready?
It's too small to serve as it's too small market cap wise, liquidity wise, to denominate significant international trade or to be the asset that commodities are priced against.
Can I add to that it never solved the scaling problem? It has never solved that scaling problem, and without that, it's not viable as an international settlement asset. It may be viable as a reserve asset. That's a different matter. We place it in parallel with US Treasuries and particularly non-USD assets, because there is a shortage of non-USD denominated reserve assets. But it's not suitable as an international settlement asset for the volumes of global trade we have, while it's unable to scale, and there is no solution at the moment.
Yeah, I think if you're saying if Bitcoin hasn't solved the scalability issue, not absolutely, but I think I know myself that I recognize it is being solved. Especially with the work recently I've seen completed by Jack Mallers with Strike, which is very interesting. Nic, what do you think on the scaling? Where do you think we are with this?
We actually have 3 different opinions on this, so I'm actually not with you on that, Peter.
Okay.
So I think it's actually a misstatement to talk about scaling as something that needs to be solved. I think that's actually the wrong question to ask, basically. So I mean, like, if you think about what Bitcoin actually is, it's a big database of everyone's transactions, right? And there's physical limits to how big a database can be, and we can still run it on commodity hardware, right? So there's bandwidth limits, there's storage limits, and there's computation limits, and those are all different bottlenecks. So, and I have personal experience running enormous blockchains, non-Bitcoin ones, EOS, Ripple. Ethereum's pretty big, but not impossible to run. Some of these blockchains are in the terabytes, and at that point, it actually becomes functionally impossible to stay current on the chain tip. So, I mean, Frances is going to interpret this as like total confirmation of her point, but I promise I'll get to the rebuttal. So, my view is that if you want to replicate a transactional ledger for global usage such that everyone is an equal peer on the network and it's a non-hierarchical network, there absolutely are limits to the size of that. And there's really not that much you can do fundamentally to change those realities. We're bounded by Moore's law. We're bounded by the amount of bandwidth, and we're having bandwidth issues on this call. It's a clear demonstration of the limits. So what I would say is, like, Bitcoin scales with transactional size and not with transactional count, per unit time. So I would compare it to more of a Fedwire system where your average payment is large. I mean, in the millions of dollars. And so I consider Bitcoin, the settlement network, to be a utility scale settlement system. I know a lot of Bitcoiners disagree. They want it to be peer-to-peer petty cash, right? But I consider it probably more to be suitable as a inter-exchange or inter-institution cross-border settlement system with payments happening at other layers, or payments happening within those entities. For instance, if we're both on Coinbase, we can transact with each other without hitting the blockchain. So that's kind of my view of it, is that we cannot scale the data throughput by another order of magnitude, but we can scale the transactional value arbitrarily, because and that has been happening over the history of Bitcoin. I think if you looked at it today, the average Bitcoin transaction would be close to probably around $100,000. I haven't checked recently, but it's in that sort of range.
So I guess, Francis, your view on scaling is that it supports lower cost, smaller payments, and that hasn't been solved.
I'm kind of at the coalface here, looking at how businesses are trying to do international business and trying to solve some of the problems they have with correspondent banking and the cost of Fedwire and all those things, and saying, I do not see how Bitcoin solves those problems right now. I don't see developments in it that even move it in that direction, because what I'm seeing is a lot of navel gazing and let's have digital gold and a reserve asset, which actually isn't the problem that I'm trying to solve from a payments point of view, international payments. I don't see these things as compatible. I don't think it's, for example, one of the things that Bitcoin has never really got to grips with is the fact that the international reserve asset that US dollar represents is actually not the US dollar, it's the US Treasury, right? the US dollar itself is a settlement asset. China doesn't hold huge quantities of actual dollars. It holds huge quantities of US treasuries, and those are its US dollar reserves. And that kind of distinction between, I guess, what you could call future money and current money, which is how we do it with fiat currencies. We have present money, which is physical dollars, pounds, euros, whatever, in the form of bank reserves or broad money, bank money, or physical notes and coins, whatever it is, right? And then we have future money in the form of government debt, and it's the government debt that is the reserve asset, really. And it's not just the dollar, by the way, dollar denominated ones, because there's a bit of a hierarchy of reserve assets, as you probably know. What Bitcoin seems to me to be trying to do is to be both reserve asset and settlement currency. And that's why I keep coming back to the incentives. The incentives, when you start talking about digital gold and things like that, are for it to become this high value and reserve asset anchor that central banks can have on their balance sheet as universal foreign exchange reserve, right? At the same time as you're trying to say, well, businesses can use it for international transactions. And I'm going, how? Because it seems to me there are two different things here, and you haven't actually quite got your heads around the two different needs and the characteristics of the things you need to use to meet those two different needs.
I think that's a very astute point, honestly. And I completely agree. Bitcoiners haven't really reckoned with this this bifurcation of what Bitcoin's trying to be. If I had to pick one, I would say Bitcoin is much better suited to being a reserve asset in the mold of a de novo gold style, monetary commodity, which is a high-powered collateral. It's auditable, which it improves upon gold in that respect. I think what I envision is a neo-free banking system emerging where entities, financial institutions issue notes against Bitcoin held on reserve. So really, looking at the work of George Selgin, Larry White, looking at that, the free banking episodes in Scotland, Canada, we had sort of free banking in the US, but not really. Whereas the protocol, if you look at Bitcoin as a monetary settlement network or a means of conveying value, that's more fragile because there's certainly other potential technological innovations that can steal Bitcoin's thunder in that respect. And if you look at the way it's really being used today, the most popular settlement or medium of exchange on blockchains is not Bitcoin, it's not Ethereum, it's stablecoins, dollar-denominated tokens. So there's a clear revealed preference for dollar-denominated transactions from a medium of exchange perspective. Bitcoin itself has been tokenized and inserted onto other settlement networks like Ethereum. So now we're seeing the asset being distinguished from the settlement network, which is a totally fascinating development. To me, that confirms the idea that Bitcoin is being treated much more as this like reserve collateral, as this asset that you would hold to store value over time and space, and less so as a system for conveying value. And now the question is, does that mean can Bitcoin last? Does it depend on the settlement network to exist? Because that's where the fees come from that pay the miners. So I think that would be, I don't want to make your point for you, but
you just did actually, which is
Yeah.
you have got this declining block reward over time. You have got
Can we come back to that?
halvings. Yeah.
Can we come back to
sure.
that, Francis? I'll come back to that. So what I'd like to get into with you there, though, Nick, is that I guess what you're saying here, what your vision of Bitcoin is quite different from a lot of other Bitcoiners who are seeing this vision of hyper Bitcoinization, that we get to this place where suddenly everybody's paying for everything on Bitcoin, whether they're settling on the main chain or using Lightning to buy their cups of coffee. You don't actually see that as a scenario. You see Bitcoin more as a reliable global settlement.
Well, I mean, and to be clear, I don't speak for Bitcoin, right? I am just a Bitcoiner with a particular attitude towards
But it's a rational argument.
But yeah, but I don't mean to privilege my view over any other Bitcoiner's view by any means. And actually, to be clear, I probably hold the minority view here within the Bitcoin community. So, but yeah, I mean, many Bitcoiners see a world where Bitcoin denominated payments are occurring, that we actually switch the unit of account to Bitcoin. I think that's unlikely. With gold, like a lot of households hold gold, but they're not making transactions in gold. They hold gold as an heirloom and a way to store wealth, safely. I mean, it's not in the U.S. as much, but overseas in other countries. So I don't really anticipate that many Bitcoin denominated payments occurring in the future. I occasionally buy things with Bitcoin, but that's just to encourage merchants who are selling stuff for Bitcoin. I always regret it when I buy stuff with Bitcoin. So, I don't see that many Bitcoin denominated payments taking over. I think it's very possible that we have stable coins issued against Bitcoin in a kind of a maker style model. I think that's very, very promising, and that people would prefer to transact with a medium of exchange or unit of account that's dollar based, but then ultimately the collateral backing that would be Bitcoin. So to me, that's like the synthesis of all of this is that eventually you would issue stable coins against Bitcoin, whether in a programmatic way or through an institution issuing notes.
So Francis, what do you think about Nick's points there? We're not really considering Bitcoin as a medium of exchange. Yes, people will use it to transact. I use it. I maybe invoice on it, but it's more of a settlement just because it's a little bit easier when I'm billing people internationally. But this idea that it's not really a medium of exchange, it is more of a store of value, but at the same time, a settlement layer. A bit like, what was it you said, Nick? The gold? Sorry, I can't remember what you said. The gold root? What was it?
I mentioned gold being used as a monetary base asset in the free banking era, for instance.
What do you think of that? Do you warm to that?
Not really.
No.
Again, you have to think about the incentives. You have to remember that during the period of free banking that George Selgin talks about, we were on a gold standard. I think people forget about this, and I'm always amused when Americans talk about the gold standard because they never ever mention the British Empire, and yet we're on a global gold standard because of the British Empire. That was the reason, because the British pound was a gold currency. It wasn't just gold backed; it was a gold currency. The international monetary standard at the time was the British gold sovereign, and prior to that, the British gold guinea. Was the international monetary standard. So in a way, you're trying to go back to that. Now, I might look back 120 years and say, yeah, okay, now 120 years ago, the whole world was on the classical gold standard with an actual gold currency. So in 120 years' time, maybe the whole world will be on a Bitcoin standard with Bitcoin as the international currency, international main international currency. It's possible. It's just hard to see that that's necessarily going to happen, particularly with a piece of technology which is going to be obsolete by then. You have to start thinking about, where does this take us? Gold is not a technology. And you have to look at the political economy. The issue I have with this is that when you're dealing with fiat currencies or national currencies, is that the whole incentive structure around money and banks and everything else is all about keeping control of banking. Nation states keep control of banks. They really do. So the chances of a nation state that wasn't a basket case, and there are some basket cases like Venezuela, actually allowing its banking system to adopt Bitcoin as its reserve asset rather than the central bank's money is not great, I would suggest. So then you're into kind of weird offshore entities and things like that. You're ending up with this kind of parallel banking infrastructure that is separate from nation states, independent of it, somehow tethering itself to it, which is what's happening right now, by creating a system of shadow banks, which claim the backing of central banks by tethering themselves to a fiat currency, but actually have no right to it. And we've never seen that before, and that didn't end too well last time, did it? So I'm wondering why we're going down that path again, because I'm not seeing how this is going to resolve itself in a way that leaves Bitcoin as a reserve asset that's adopted by nation state banks. I don't get it.
Yeah, so I think you're absolutely right to focus on the political economy. That's clearly, the right way to analyze the the predominance of currencies. I think a lot of Bitcoiners see the U.S.-led petrodollar regime as degenerating right now, and I think it's not too difficult to arrive at that conclusion if you look at the fact that foreign central banks are generally divesting themselves of treasuries as opposed to acquiring them right now. You look at China and Russia trying to build alternatives, even our European allies trying to build alternatives to route around American dollar infrastructure. Structurally, the US is a smaller share of GDP, of global GDP, than it was after World War II. So its ability to sort of maintain that dollar system seems to be decaying. And, I think the Bitcoin hypothesis here is that there isn't a worthy successor to the dollar. And, there'll be a number of alternative modes, of commerce and alternative reserve assets, which emerge once treasuries are, I think it's very possible that treasuries could be an extremely bad asset to hold over the next decade if the U.S., adopts a more inflationary stance and holds interest rates really low. But I mean, to your point about, central banks not holding Bitcoin. I mean, right now it's limited to pariah states, but there are sovereign currencies that do hold Bitcoin on their balance sheet. So we started with as you say, the basket cases. So it's rumored that North Korea has Bitcoin. I personally believe that. Iran seems to be undertaking an interesting approach where they have semi-nationalized mining facilities, and seems like they are accumulating Bitcoin for international kind of trade finance purposes. Although, again, it's sort of hard to get good data on this. Venezuela absolutely holds Bitcoin. That regime does. They seized a bunch of miners, so they have state-sanctioned mining operations, and you can. Well, look. I mean, I'm just pointing out reality here. I'm not casting aspersions.
How is this consistent with Bitcoin? Is this decentralized asset independent of nation states when you've got miners being nationalized by nation states? I don't get it.
Well, because that doesn't really grant them a lot of control over the protocol. They're subservient to Bitcoin, right? Bitcoin is the dominant player in that relationship, So Venezuela can try and change Bitcoin all they want. They're welcome to submit a pull request on Bitcoin Core. But I mean, the hash power argument, like, sure, if Venezuela had 90% of hash power, I'd give you a different answer. But they have like 5%. So, I guess the point I'm making is right now, Bitcoin is in its infancy. It's still being adopted by sovereigns, albeit the, least credible ones and the ones that are the most excluded from the financial system. However, it's not like Bitcoin, it has pariah status in the US. Like, the Office of the Comptroller of the Currency literally said the banks can hold Bitcoin for their clients if they want. They said the banks can use public blockchains for settlement purposes. So, Singapore, there are actual banks in Singapore which hold both fiat and cryptocurrency. With state mandate. We've got banks in Wyoming, which are narrow banks holding Bitcoin and dollars. Those charters have been approved. So it's not like this is not happening. I mean, we're seeing the progressive acceptance of Bitcoin at the banking layer. I mean, there's a lot of examples I could point you to there.
Frances, are you smirking because the examples here are rogue states with questionable governance and democratic institutions?
No, I'm not. It's actually I'm smiling a bit because of what it's saying about banking. So my interpretation, for example, of the Office of the Comptroller's letter was that it gave permission to banks to issue their own stablecoins and to take over existing stablecoins. So mindful of the fact that Goldman Sachs already has a stake in Circle.
Yeah.
So I didn't see that letter quite the same way you did, Nick. You see, I mean,
Well, I'm referring to 2 letters, to be clear.
Okay, fair enough.
There was the prior letter where they said they can custody Bitcoin on behalf of their clients,
and
which
I
is
think
just...
also, and I think also there's a huge difference between custodying an asset on behalf of your clients and adopting yourself as a reserve asset are 2 entirely different things. And I don't think we should confuse the 2. It's perfectly reasonable for banks, with the approval of the regulators, to custody any asset, and that might include Bitcoin. That's very different from using it themselves as a reserve asset. As it stands, any bank that wants access to the to FedWire has to use dollar reserves.
Yeah, that's correct. I mean, there's accounting issues to be worked out and just acceptability issues as well. I guess the point was that we're progressing from Bitcoin having 0 acceptability to now partial acceptability in banking use cases. And
I think it's more that Bitcoin is more accepted as an asset. Because, I mean, I keep coming back to the fact that banking is not a custody model. Banks will custody assets. They will act as custodians. But the basic banking model is not a custody model. When you put a deposit in a bank, you're not putting that money in custody. You're lending it to the bank.
Yeah.
And that model, that fundamental model of banking where you lend your money to the bank and the bank lends money to other people and it makes money on the spread between the amount at which the rate at which it lends and the rate it pays you, that fundamental model of banking, that Bitcoin's not part of that at all at the moment.
Well, I mean, not. So Peter knows, because one of the sponsors of his show is BlockFi. They do exactly this. They have billions of dollars of Bitcoin, being lent to them by people like myself and Peter, and they lend it out on the other end. So they're engaging in banking activity, maturity, transformation, whatever you want to call it. They're not a chartered bank in the U.S., but we have these institutions that are doing this, right? At scale.
I did say shadow banks and unregulated banks. That's what shadow banks are. So you've got unregulated banks with no banking licenses and no access to the Federal Reserve, taking deposits and lending. They're called shadow banks.
Well, whatever you want to call them.
They always exist.
Francis, what's wrong with shadow banks just out of interest? Give me the argument against them.
Well, I don't think shadow banks can ever be stopped. There will always be institutions that exist outside the regulated infrastructure. There always will be. I think where we get into trouble is where they start to become very big and very dominant, and they tie themselves into the regulated system and transfer their risks to the regulated system. And that's when we end up with something like 2008, which was a shadow banking collapse, where the risks of those shadow banks ended up in the regulated system, bringing down regulated banks and forcing central banks and governments to bail them out. That's the risk. Now,
so you blame the 2008 crisis on shadow banking?
Oh gosh, yes. There's nothing controversial about that, Peter, at all. It's absolutely about shadow banking.
I'm with Francis on that, honestly.
Just so I understand, explain to me which are the shadow banks. Give me an example on why they caused the 2008 financial crisis.
Well, shadow banks at the time included, things like, would you believe, Goldman Sachs, Lehman Brothers were shadow banks. They weren't regulated banks. They were huge. And also the foreign arms, the US arms of regulated European banks were part of the shadow banking infrastructure in the United States. It was the offshore. You can think of it as the offshore banking structure. But it's surprising how many of what we think of as investment banks were actually shadow banks. Lehman Brothers was a shadow bank, and Goldman Sachs was at the time. It became a regulated bank after the financial crisis.
And if they were regulated, sorry, just so I understand. So if they were regulated, what would they have been doing differently?
Well, I mean, it's jurisdictional. How banks qualify for banking licenses, full banking licenses, the structures they have to have and the regulations they have to submit themselves to depends on the jurisdiction. But basically, any bank that is regulated does have to submit itself to the regulations of that jurisdiction. Now, a lot of those are governed these days, or at least not governed, but certainly influenced by the Basel requirements for capital and liquidity, which have been beefed up considerably since the financial crisis. But also in the United States, things like the Dodd-Frank legislation. Yeah, in the UK, things like ring fencing. These are in Europe, in the EU, things like the Bank Resolution and Directive. Those are all jurisdictional. And any bank that acquires a banking license within that jurisdiction will have to be governed by those regulations and supervised by whichever regulators in that jurisdiction are appropriate for it. So anything that is doing bank-like things that is operating outside those regulated structures is a shadow bank. And there's lots of different kinds of them. And it's not surprising that the cryptocurrency ecosystem is growing a lot of shadow banks. The question is whether they'd ever be brought back into the fold.
So you think it's important to have regulation, and this would be something not all, but Nick, a lot of Bitcoiners hate. They hate regulation. They want no regulation, perfectly free markets. But the idea that actually it was the lack of regulation that caused the 2008 financial crisis, and without regulation, we could see other financial crises within, say, Bitcoin.
Yeah. We've actually seen financial crises within Bitcoin already. I mean, what do you think some of the exchange crashes are? I mean, exchanges are unregulated banks, and you've had exchange crashes like, how many littered with them. They're not a problem as long as they stay within that ecosystem, and as long as people take losses within that ecosystem, and the exchanges and whatever do whatever they have to do to recompense their depositors, Bitfinex applying haircuts to everybody and then issuing a token to try and recover the money and all that kind of stuff. Right, as long as they're doing that, then they're not causing a danger to anybody. The problem with the pre-2008 shadow backing was it was built on top of the regulated structure, transferred its risks to the regulated structure, and then we ended up with an awful lot of spillover effects to the real economy. And at that point, you have central banks and governments stepping in because the social harm is so great, and that was the problem. And where I start to feel worried with crypto shadow banks is when they start trawling for retail customers, because that's when you start to see that kind of level of potential social harm developing. It worries me hugely when I see, I don't know if you saw this, Nick, earlier this year when I think it was Uphold was blatantly trawling for retail customers and saying that its deposit accounts were the equivalent of FDIC insured bank accounts when they weren't.
Yeah.
And as you know, Cred went belly up in November. So
to be clear, I find that kind of thing reprehensible. Making like misleading claims about the quality, especially when lending is occurring. And obviously there's no FDIC in crypto. That's impossible because you can't print more Bitcoin. I think though, generally my reaction to this would be, as you point out, the risk is largely contained when exchanges fail, because there's not a lot of sort of risk sharing between exchanges, banks, whatever you want to call them. I think another thing that would make Bitcoin less likely to have these buildup of credit bubbles and then that explode all at once would be the nature of Bitcoin as collateral. So Bitcoin is highly auditable. I can prove to you cryptographically that I own some. You can't do that with gold. It's very hard with regular financial assets, That was one of the issues, I think, with the financial crisis, is that, there were multiple claimants on the same collateral. The same collateral was rehypothecated many times. With crypto assets, they're built to be strongly auditable by definition from scratch. They're natively digital. That's the special thing about them. So an exchange, for instance, if I asked, could prove to me that they had coins, that they had reserves corresponding to all the outstanding liabilities. Now, that doesn't happen a lot, much to my chagrin, because trust me, I asked the exchanges, and they don't do this very often. There's a process called proof of reserves, Doesn't happen very much. I wish it would. But in theory, we could achieve a very strong level of transparency from these deposit-taking institutions. We could have provable reserve ratios, or some of them are narrow banks, right? And so we could have, full reserve proofs of that. So to me, like, crypto assets help prevent this unsustainable buildup of leverage and credit, at least if users are willing to take advantage of that this actual cryptographic auditability that these assets afford us.
Francis, would you also think about the fact that the FDIC insurance actually creates the wrong incentives for banks? As far as I'm aware, from when I did my research on a recent project, it was under the Clinton regime where they actually changed the rules for the banking infrastructure. They wanted to encourage more people to be able to borrow, and I think they reduced the rate. I can't remember what they reduced the rate to, but essentially the FDIC insurance became a kind of backup for banks to be able to lend more and not really have too much concerns about delinquent loans. Do you not actually think that FDIC insurance actually encourages poor behaviour as well?
Yeah, and the moral hazard issue from bank deposit insurance is one of these sort of long-running arguments about how you make banks safe and how you protect the money of depositors. There is a fundamental problem at the heart of banking, and that it doesn't matter what banks are lending, you always have this problem, which is that on the deposit side, you have a bunch of people lending money to the bank, thinking the bank is going to keep it safe for them and just let them take out money whenever they want and make whatever payments they need to make from their bank accounts and whatever. And on the other side, the bank is lending it out. It's lending money, let's put it that way. We have to be careful about terminology because banks don't actually lend out the money they take as deposits. It's a bit more complicated than that. But lending money, which puts those deposits at risk because the deposits are not in custody. It's not client funds. This isn't like asset management. They've actually lent the money, and therefore their claim on the bank is one of a creditor. Now, they're senior creditors, but unless there are other things in place to protect those depositors in the event of the loans going sour, and loans do go sour, it is of the nature of lending that a proportion of loans either won't be paid or won't fully be repaid, and of the nature of investing in loan assets, so tradables, that their price varies. That there needs to be some kind of buffer to protect those depositors. And that's a lot of the regulation since the financial crisis has been about ensuring that fiat currency banks have those buffers in place. It's not about having cash reserves. It's about having equity. It's about having shareholders, with some skin in the game. That's what it's been all about. And I have been very concerned about the opacity. I'm going to share Nic's concerns here about the opacity of crypto exchanges and stablecoin issuers, because it seems to be that they're not doing a lot of the things we've had to make banks do to protect depositors. Whenever you've got...
But strictly speaking, with Bitcoiners, you have the ability to be self-sovereign in a different way that you can with your dollars. It's slightly different with your pounds and dollars to keep them under the bed. The fact that you can custody your own Bitcoin does mean you aren't reliant upon exchanges and such. And so we all within the Bitcoin world pretty much encourage people to learn to be self-sovereign, so you don't have to have that risk. So it is slightly different. I think if you're moving risk around, if you're relying on somebody else to custody it, you're taking that risk. But that's the risk you take. But you have the opportunity to self-custody.
Well, that's true, but when you self-custody, you lose liquidity. That's true in Bitcoin as anything else. So if you want to have an instantly liquid account from which you can make payments, it's actually extremely difficult to do if you're self-custodying. So it's not quite that simple, is it? And it is always that trade-off between safety and liquidity, and this is true even in conventional bank accounts. The more secure you make your account, the more difficult it is to use. And that's true in the Bitcoin world, in cryptocurrencies as well. It's also the fact that, in a way, banks are the gateway to real world payments in a way that crypto exchanges aren't. crypto exchanges and people running full nodes and so forth are not generally they're not managing main payments in the way that mainstream banks are. And until we have that kind of payment infrastructure operating through in the crypto world, we're not comparing like with like. Nearly all crypto transactions at the moment are just simply to buy other cryptocurrencies. They're not to pay your mortgage or your fill up your car with gasoline or whatever. And until we've got that, but that's what people use their bank accounts for. And until we've got that kind of functionality in the crypto world, we're not comparing like with like. So I think we need to be a bit careful comparing crypto banks with conventional banks, because they're not doing the same job right now.
Yeah, that's an interesting point. I mean, they definitely are different, because using a crypto bank is like using, well, maybe it's not, but it kind of reminds me of using a bank and then having, as a retail individual, access to the Fedwire system as well. And able to access that sort of high-powered settlement infrastructure. And I guess the disanalogy also that Peter was referring to is the fact that you can easily reserve that base, you can withdraw the base asset from the bank, whereas that's not really possible with a regular commercial bank. I mean, I suppose you can pull out physical currency, which I guess I would call base money, from the bank. But for the most part, people's deposits stay trapped in the banking system. So there's something different, about fiat, regular, conventional commercial banking and crypto banking, whereby you're less indexed to the system. As a crypto depositor, you can always exit should you choose to. So, I mean, I guess I agree. I think there are serious disanalogies.
See, I grew up I'm older than you, and I grew up in a time when cash was dominant, and most people worked in cash, and quite a lot of people didn't even have bank accounts. So in a way, I look over my lifetime and see how things have changed. So I don't really agree with you there. The fact that people now choose to operate mostly through the commercial banking system just is a development of the last 50 years.
Right.
It's not necessary. We could revert to using physical cash. It's just less convenient.
Well,
it's just a convenience thing.
Well, that's why we invented digital cash, right?
Yeah. But the thing is I think it becomes even worse with the advent of CBDCs, whereby you have nothing you will be able to withdraw. You will never hold or own your cash. Everything will be an IOU.
Well, I mean, and worse than that is that CBDCs can be weaponized for surveillance or control, right? So like, to me, that's why physical cash is a great product. To me, it's amazing. I love it. I mean, I don't love having lots of cash. I don't really use it ever, but I wish people did use it more.
No, I'm in agreement with Nick on this. It's been a theme of mine for some years, that the power to shun, really to shut somebody out of everything that makes life possible, is a power that governments shouldn't have. So I actually think we need things that people can use outside the government control system, and
like
this makes
Bitcoin.
me sound
like a Bitcoin.
Yeah, there you go.
I said this. I have never been wholly opposed to the principle. I told you that, but I was disappointed that it has suddenly become this digital gold asset. And that, for me, that wasn't what was needed. What was needed was a means for people to transact outside the government controlled system. They've always needed that, because it has to be possible for people to live.
Nick, I think we need to take the win here. We need to. Well, listen, look.
Well, there is. I agreed with a lot of what Frances had to say too, so I think she scored some points for sure.
This is highly reasonable. Well, there is another thing we need to talk about. Something you've been a bit teased about. We need to talk about scarcity.
Oh yeah, I knew you were going to get to that.
Well.
I think you're going to find that we're actually on the same side of that one too.
Well, so do you want to explain your point with regards to scarcity, Frances?
I'll try. Okay, there are two aspects to this. So we can look at scarcity from the point of view of Bitcoin of the hard cap, and also the subdivision. I dealt with the hard cap first. That which is a lot to do with obsolescence and belief and community and networks and stuff like that. So let's talk about the hard cap first, because there's a lot of faith involved in this. We're told that there will only ever be 21 million Bitcoins, and I go pull the other one. Because you've alluded to this already, that when you, as the number of Bitcoins being produced, as the block reward diminishes, so transaction fees become more important. And as your transaction fees rise, which they must, then the number of transactions on your network is going to decline. If you're not careful, you're going to end up compromising your security model. So it may well be that the 21 million limit does have to be rethought at some point. It is something the community may have to face, and I wouldn't personally rule that out. And for that reason, I would not like to say that 21 million was necessarily fixed in stone. And my second point about this concerns obsolescence. Remember what I said earlier about 120 years ago, the whole world was on a dollar standard and a gold standard, and nobody would have foreseen that in 120 years' time we would have the gold would be demonetized and the whole world would be on a dollar standard, right? Equally, we cannot foresee what the world will be like in 120 years' time when the block reward finally ends. And it is that far away. I know it diminishes over that time, so in a way these things will have to be thought about sooner. But the actual 21 million limit isn't hit until about 2140. Now that's long after all of us are dead. We have no idea what the community of that time will decide. We have no idea if they'll even still be using Bitcoin. I mean, if you look back to the technology of the year 1900, there's not a great deal that was being used then. It was new technology then that we're still using now. It would be like still driving around in kind of antique cars. So I'm very concerned by this kind of 21 million hard limit, because I don't think it's credible as a limit, as a hard limit like that. I think what's more important actually in terms of scarcity is actually the supply rates, the rate of increase, which is fixed and known and reduces at each halving, right? That's actually much more important, because it means that when you have changes in swings in demand for Bitcoin, which you do, so in the last week we've had in the last few weeks we've had quite an increase in demand for Bitcoin, right? The production rate can't increase, right? So the only thing that can adjust is the price. So volatility, I know people saying volatility will decrease over time, and I go, no, it won't, because the whole thing is demand is volatile, naturally volatile. Demand for everything is volatile, and Bitcoin cannot respond to demand changes, so there will always be volatility in the price. Now, it's of the nature of a market, of a free market, that some people are priced out of a market. So when demand for Bitcoin is rising, more people are going to be priced out of the market. It will become, in that sense, more scarce simply because the price is rising. And similarly, when the price falls, more people can come into the market. I mean, heavens, this works on the mining side. This is how the difficulty adjustment works on the mining side. No, it's no particular reason why it wouldn't work in the price market for Bitcoin itself. What muddied the waters considerably regarding that kind of innate changes in supply and demand equilibrium, whereby the price adjusts to equilibrate supply and demand, which is basic economics really, is the subdivision. Because I got pilloried quite a lot on Twitter for saying that the subdivision made Bitcoin less scarce, which was kind of upset quite a lot of people and made a lot of people laugh, and there were lots of jokes about pizza. But what I would like to say is that by subdividing something like Bitcoin, you make it possible for more people to buy into it. So you've increased its liquidity. Yeah. So even when your price is rising, in a way, you're still supporting demand for it. Does that make sense? The more you can subdivide it, you can maintain your demand.
Because let's say if there are if the smallest unit of Bitcoin was 1 Bitcoin, then it would, your point is it would price out people as the unit price rose.
Absolutely. Yeah, and to talk about pizza for a minute, so there are physical limits to the amount you can subdivide pizza, obviously, and Bitcoin you can subdivide down to much tinier fragments. But if you think about it,
I think I see the point you're making. You're saying
subdividing
it makes it more abundant because it makes it more liquid at higher unit prices.
Yeah,
basically.
and it can bring in people who would not buy a whole Bitcoin. Just as if you sell slices of pizza, you can attract people who wouldn't buy a whole pizza. So you've almost potentially got an. Here he is with the pizza. I had to bring the pizza in, didn't I? I mean, it just was necessary. So you see, he's got a slice of pizza.
I've had I keep running. I've not run out. I've been eating it the whole interview, and every time
this is unfair. I'm getting really hungry, dude.
Every time I run out, I just get the pizza cutter, cut it in half.
Yep.
And I've got more.
Okay. All right. Well, we got our jabs in.
Okay, we got the idea. Yeah. So, but the point I'm making is it can actually create a new market. The people who would not have bought a whole Bitcoin might actually buy a small amount of a Bitcoin. It makes it more accessible.
Frances, are you saying that the smaller subdivisions of Bitcoin makes it potentially increases demand, basically, by opening it up to a bigger market kind of sector?
Yeah, exactly. It opens it up to the kind of market that might have come in earlier if it hadn't been so geeky in its early years and nobody understood it. Back in the day when it was worth a few dollars. It's opening up to those sort of people, to much lower income people who can't afford to buy a whole Bitcoin, but they can buy a few Satoshi, right?
But they can do that now.
Yeah, that's exactly what I'm saying. And that was all I was saying when I said that the subdivision, the ability to buy Satoshis rather than just Bitcoin, makes it more abundant, makes it less scarce than it would be if all you could buy was single Bitcoin. That was all I meant.
I mean, but it sounds like you're making a point in favor of the subdivision being good for Bitcoin, good for the unit price of Bitcoin.
Well, it kind of is. And we had a bit of a debate on Twitter about whether subdividing something increased the price. And it was kind of economist discussion. It was a very interesting one, and I need to write up what I think. Because I think that when you start dividing, it does in the short run, right? I don't think it does in the long run. It's one of these short run versus long run things that we get in economics, right? Where in the short run it raises the price, but then you get diminishing returns. And once everybody's got some, or everybody's got whatever, then the price falls back down again. And over the long run, it doesn't make any difference. That's my opinion. But economists don't agree on this. There are other people who said it didn't make any difference at all, and others who said, "Oh yes, it definitely raises the price." And none of us actually know.
Can I give my view on Bitcoin scarcity?
Yes, please do, because I disagree with Frances, but I don't know how to articulate it, but that's why you're here anyway, Nick.
I mean, honestly, I think it's totally contingent, like what the subdivision of Bitcoin is. So, right, like you can divide a Bitcoin into 100 million units. That was what Satoshi picked. You could optionally make a change to the protocol. It wouldn't be that hard to add more decimals. So there's nothing about Bitcoin that really requires that the smallest unit is a Satoshi. You could go smaller if you wanted. We could make an agreement for us to exchange 1/10 of a Satoshi, and there we subdivided Bitcoin, right? You can do probabilistic payments on Lightning. That's sub-Satoshi payments. So anyway, the point is there's no lower bound. There's no Planck length equivalent for Bitcoin, right? Like in the real world, we have the tiniest subdivisions. Well, I guess I don't know that much about subatomic particles, but let's just entertain the fact that there's like a truly discrete unit as you get small enough. With Bitcoin, it's software. You can get as small as you want, infinitely. So I don't even think about units of Bitcoin. I think about quantities of Bitcoin, so I think of Bitcoin more as kind of like liquid, and you can put it in cups in your mind. UTXOs, those are sort of cups containing certain amounts of Bitcoin. And, so that's when it's useful to reason about it in the sense of like dividing up a pizza, because you don't ever have really one unit of Bitcoin. You have 1/21 millionth of the entire supply. I think that's really the way to think about it. And I don't think Bitcoin can be really scarce or abundant. There's just a set amount of it, and there's a set amount of sort of purchasing power that is allocated to it, the same way that the Earth allocates $9 trillion worth of purchasing power in real terms to gold. We allocate 500 billion or whatever it is of purchasing power to Bitcoin, all the outstanding Bitcoins. But as you say, Francis, demand is what determines the price of Bitcoin. The supply is totally invariant, really. I mean, it changes a little bit, but not really. So we just reprice Bitcoin based on what demand happens to be at a given time. So I don't really think of it as scarce or abundant. It's just kind of, there's a certain quantity of it, and the value varies in real terms as demand fluctuates. So I don't really understand the brouhaha around Bitcoin scarcity at all. It doesn't seem that complicated to me.
Well, for somebody like myself, trying to understand it, there's 21 million, and we have 8 decimal places per Bitcoin. If you subdivide that further, it still doesn't change the fact there's 21 million. Yes, more people can access it, but the scarcity is it doesn't. Yeah, I actually think
I don't consider Bitcoin scarce though, right? Like scarce is something
limited.
Where it's like kind of fixed in supply, finite. Yeah, but scarce is like there's no necessary quantity of Bitcoin that the world needs. There could be one unit of Bitcoin, and in my view, that would be sufficient, right? We would just have to figure out how to divide it up. Like scarcity is something like water, where we have a necessary physical amount of it that we need to survive. But with Bitcoin, there's no physical tether. There's no requirement that we have a certain amount of it. So I don't consider the word scarcity like apply to it, basically.
But I think the important point is if we subdivide it further, it's not going to materially change the price. It's not like if we suddenly went to 42 million, we change the issuance rate. If we subdivide it further, that's not going to dilute the price.
Yeah, I don't think that's the point Frances was making, though. I think she was pointing out that there are second order effects on the price based on sort of how the market is able to engage with Bitcoin. Certainly, if there was only one unit of Bitcoin, then it couldn't have reasonably monetized. So adding the subdivision helps the monetization.
Yeah, that's exactly right. That it simply makes it more liquid, and generally speaking, over the long run, making something more liquid tends to reduce its price, but in the short run, it can increase it. Which is why I said I would expect the price to go up in the short run and fall again in the long run. And over the very long term, I don't think it would make a great deal of difference. But but in terms of the, it doesn't change. It doesn't change how much Bitcoin there is. But I think this use of the word scarce is a little bit loose. And actually, to be fair, somebody picked me up on this on Twitter about this rather loose use of the word scarce. Because actually, in economic terms, everything is scarce, because economics is about the allocation of scarce resources, and what markets do is allocate scarce resources, and price is the mechanism by which they do it. So to say as a kind of a good thing, oh, Bitcoin is scarce, I'm kind of, well, everything's scarce. What exactly are you trying to say here? You're saying that Bitcoin has a finite supply. There can only be 21 million of it. And to have any more of it, the community's actually got to change its mind about what it wants. There's actually got to be a change to the code. Then there are those who say, well, that would be a hard fork and that wouldn't be Bitcoin, and we can have that argument all over again. So
that's my side. That's the thing. That's the side I would take. Yeah, exactly. I forgot to even address that, but that's like maybe less interesting because we've been over it like a zillion times.
It's actually not that interesting.
But but I think the scarcity point, Francis, is helpful for people to understand. Like we're not all economists. I think there's a lot of people like me who actually are just kind of like, just trying to figure out how to invest in a few things and make a bit of money and get by in life, right? We're not as an economist like you, or we're not all smart like Nick. Some of us are just trying to understand this. In the 21 million, the point of the scarcity is that, to me, the scarcity says this is a race. This is a race to get as much Bitcoin as you can because there isn't a lot to go around, right? There is a limit. It isn't unlimited, let's say. And I think that's the scarcity. That's the point that someone like me understands from it. So whilst Nic says, it isn't, it isn't as such. For me, it is scarce because I think, right, there is only 21 million. Yeah.
Well,
the
it might be
benchmark
easier
is
if we
scarcity.
just talk. We could talk about it being fixed or finite. I think those are maybe better descriptions of what it is.
I mean,
Yeah.
But I think it's.
Although-
I think it has the same meaning to somebody, whether you talk about finite or scarce. I think the intrinsic meaning to somebody is there is a limited amount, and they might become harder to get as the issuance rate changes with every halving. And I think that's an important concept for us. And to them, for someone to say, well, you can subdivide it further to make it less scarce, I don't think it changes that because there is still 21 million Bitcoin. There's still that limitation.
Sure. I mean, and I'm not saying differently. I mean, I certainly wasn't saying that subdividing it created additional Bitcoins. It's
Yeah.
not cloning. It's not cloning.
We were knocking down not me, but Bitcoiners were knocking down a straw man version of Frances's argument, to be fair.
They were a bit, although I did feel like pointing them towards cloning as an example, or even just kind of any form of asexual reproduction as a case of subdividing something, creating more of it. But then thought, no, perhaps not go there.
But again, I don't think it does create more of it. I don't think it does. Because
no, but that's what.
If things are priced in Bitcoin and you subdivide it further, you've just got further decimal places. It doesn't.
No, absolutely. That's what we were saying.
Yeah.
Whereas but with reproduction does create something new. It does increase the total population.
And I was saying that, and I wasn't saying that was what was happening. Not at all. What I was saying was simply, all I was saying was that subdividing it made it more accessible, and therefore it could create new markets for people who are currently priced out if what you're selling is whole Bitcoins. That's all. So you've potentially got greater demand, at least in the short term, and that's going to push up your price a bit. That was all I was saying.
I think that argument's correct, though. But I think saying that it isn't scarce, like whatever the language is, I think that's wrong. But I now you've explained it, I agree with your point. One of the funny things is I've let people know the show's out. People can't wait. And one thing I will say is debating you like this and talking to you, it's a lot more rational and better than on Twitter. And I think some people are going to be surprised by this. I'm just conscious
people
of time.
Are going to be disappointed, I think, because we
we
didn't yell at Frances. We were too nice.
They think I'm going to be a headbanger.
No. Well, listen, but I think one of the other things is, I think by the end of this, I would say you probably disagree. I think you're slightly more of a Bitcoiner than you were at the start. I have that feeling, but you might not want to admit that, or I might be wrong.
I do think there's something exciting going on in the space, and like I said, I do think it's important that people have something they can use that is outside the government-controlled system. I'm not very MMT. This kind of sort of the state is everything, and you shall all use state money, and we must clamp down on everything that isn't state money.
Francis,
Sorry,
if I sent you some Bitcoin, what would you do with it? Sell it because you think the price is high now, or sell it because ethically you don't want to hold it?
I think ethically I don't want to hold Bitcoin. I have real concerns ethically with Bitcoin for a number of reasons, which we haven't got into, to do with its energy use and stuff like that. I do think proof of work does need to be reconsidered if it's to be a mainstream thing. So I might exchange it for something that's less environmentally damaging. But I've
got that on my list. The other thing I've got on my list is Tether. But we have done nearly 2 hours now. So I think this has been fantastic. I think we should reconvene and do a part 2 and talk about energy consumption and Tether, and perhaps see if there's anything else. I just want to say, Frances, you are very different in person from how you come across on Twitter. I thought you were like a raging Bitcoin hater. I don't agree with everything you said, but I think this has been a very fair debate. I think people are going to be very disappointed. But at the same time, I've learned a lot from this. I'm very intrigued to spend. I actually want to make another show with you, Nic, about your thesis that we covered, kind of what Bitcoin really is, because I think I'm more drawn to that than the hyper Bitcoinization one. So we can get you up to number 8, Nic, and lead in the chart. Okay. Well, listen, thank you both of you. Appreciate your time. Let's reconvene for a part 2 soon. This will probably going to go out on Friday. Take care. Thank you.
Thanks, Peter. Thanks, Frances.
Pleasure. It's been good.